Hello guys, and glad to have you on board again today. We'll update on this Tuesday because we have additional valuable information to add of what's been said last weekend. Most importantly, we finally have some daily signals confirmed by yesterday's candle close. We have a context detection from the algorithm, and it is definitely a valuable information for a divergence pattern. As we can see, the previous two tops that could have been highlighted as a potential divergence were totally out of rational standards. In here, we feel a lot more valuable than before because we can see that the momentum space is starting to slow down. We have the acceleration pattern and all of those things that we need for a divergence to be probably showing up. The thing is, though, that highlighting in here doesn't necessarily mean that we're going to flush this all out. Remember that the divergence pattern is more like a slowdown momentum pattern from a trend, but still it's an intermediate trend maturity. That means that at this point, buying resistances is absolutely dumb. But that doesn't mean we're going to break supports. It's definitely not the case. The following pattern maturity is the pullback, in which we generally retrace back to supports and most likely going to hold them. So the first available support is going to be the 23% and so on. You know the drill. That's what we've been talking about in the weekly update. The thing is that now, well, sure thing, we could just be halfway through the first support and there could still be another drop. And don't get me wrong, this is still fairly probable, but I doubt this is necessarily going to happen in a straight line. What I think is most likely going to happen is the fact that now that we're oversold into the lower chart time frames, okay, the thing is that we could oscillate in here for a little bit. And I still tend to believe that this is very likely of an option. I don't think that we can necessarily range in here for a long period of time, but I think that the daily signal we've triggered is going to act as a resistance. So I think building a third range boundary is probable. Retracing right back to support probably is going to be yet another time pattern like that. The question to me is, how long are we going to manage to sustain Bitcoin below the 62K resistance and still maintaining the early supports we're building right now above 52K? That's a 10K area in which I think Bitcoin could settle for a little bit. That's not necessarily something we can handle for long. That would be a first in history, actually, to have Bitcoin staying 2 weeks into a 10K area. So I would actually say that this would be a far better sign that people may think it is. If we destroy volatility below resistances for Bitcoin, that might be an absolutely staggeringly good, healthy sign of a forthcoming trend to still be at play. So yeah, I'm really much questioning where are we going to build a support. We can see that we have some trending signals on the trend channel. So as we've seen, we've got deterioration signals on the daily chart, but it turns out to be somehow turned around by the short-term time frames. So these short-term time frames are bullish, this one's a bearish, reason leading me to believe that we're going to oscillate with this trend channel for a little while. That still allows us for slightly higher high points. Remember that the divergence pattern can still be grinding a little bit higher and higher, but normally anytime we try to accelerate on top of this context is going to be so resistant. So really much about the fact that I don't think Bitcoin is the center of the maze, but as long as it maintains some neutral bullishness, staying closer to the resistances rather than the supports, I think this could flow a massive amount of money and attention into altcoins. What I like with the altcoins is that they all have different perspectives. This is why things get more complicated. If you're just bulk buying every altcoin out there, you're probably going to have some troubles because this is not necessarily what's going to happen. The thing is that we are late stage trending for most of these, meaning that this is more a rationality of context. Some already have made a lot of gains, not to mention like the Polkadot, the BNB chain, all of these guys that have been piled on some massive gains already. I don't think these guys have much strength to go to the upside. I don't think they're going to surge like hell in a final burst of energy. I think most importantly, these guys will go for divergence as well, just like Bitcoin did, looking for the trend channel, and they will very likely slow down the momentum space out there. So I suspect like Polkadot could make an all-time high, but not a fancy one. Same thing goes, in my opinion, for BNB, who could try to grind its way up to some all-time highs, but not end of the world territory, pretty much going for divergence is very likely. Go God damn it. Okay. Oh, this one is not going to go divergence. This one is probably going to go for 1-to-1 ratio. So take the breakout level. Okay, and out of the breakout, you're probably going to get a breakout target in here. That means starting at the breakout target, and you can, of course, let yourself ride a little bit, but as you reach out this target, put a trailing stop loss or just profit take. Getting out at the market top is something that you're harshly going to be able to do unless being very experienced in the market. So don't try to catch the market top. It's most likely if you want to breakout trade these guys to the upside, well, I think that's something that can be done. It's just that rational enough. Think of it as most of the gains have already been made. You've missed it or you've taken the gains. Who cares? What matters is you need to understand the next motive. The next motive isn't going to the moon. It's most likely just reaching out for a slowdown pace of momentum. Same thing that happened to Bitcoin, but in a different state for altcoins, basically just a few weeks away into the shift in time frames. Then you've got, of course, things like that. Same thing, lots of gains piled already. If you want to go all-time highs for this, don't be dumb enough to figure out for a massive market top. Just think of it as a slow down pace of momentum. Solana might be on the same state, okay? Don't be too greedy. These guys still have a positive rising trend channel, so look for profit taking on top of these levels and don't be too greedy. Same thing, very likely divergences to show up out there. What I like instead is all of the other coins that don't have this motive. Those who have heavily trended, lots of people will say, oh man, they are the most bullish ones, so they are gonna skyrocket. This is probably where they're gonna make the most stupidest mistakes, because I probably think that those who have surged the most already will probably just diverge. That means they will be the most valuable assets to buy after another range. Okay, those who surged the most, who had the most bullish runs, will be the one to buy the most for a next run, probably later throughout the summer. But that's a topic for another day. First, we need to catch a market top, and that's a big question mark, and then we need to consolidate and see how much we consolidate. Well, the story is we will assess the strength of the overall assets, one versus the others, after we had a complete cycle. Right now, we've just seen bullishness. The big question mark surrounds how are they going to handle consolidation, and that's really a lot of uncertainty out there. Okay, so quality will emerge out of a set of cycles, not just assessing how bullish the asset has been. Now, what I like is the other types of assets. So not Cardano, who's made all-time highs, but Ripple, who is still standing in the middle of its range. Don't be dumb enough to figure out that this 2 days move of 10% is the beginning of something bigger. Well, it could be, but look at this. Multiple times this asset trying to accelerate within the range. So we have a breakout target in here. Don't get me wrong, either this is the beginning of something much bigger and we're going to break this area. I would actually take candle closes as a reference. So consider 0.65 as a reference anchor point. If these prices were managing their way up to 65 and eventually holding some candle closes in here, that would be the highest candle close, and that would be a fairly reasonable sign to be bullish again in Ripple. But don't get me wrong, these types of candles in which prices accelerate 10% rapidly and stuff like that could just be the stupidest entry prices for people who are not assessing that we're trading right into the dumb zone. So this is the dumbest possible prices to buy. These are average prices, which means either you bought Ripple previously and you're just holding the shit after the massive problem with the SEC, and you're still thinking that there is potential for Ripple and they just need to work themselves out of this area to stand for 1.34 to $1. Other ones will say, okay, this is bullshit. This is just the wrong horse. We're going to sell the crap. And in the meantime, these guys are battling one another. So who the fuck knows the future? I certainly do not. So I'm not acting into the down zone. This is an area for gamblers to bet on one side or the other at very unattractive risk-reward ratios. Stellar Lumens oh man, I like this guy instead because I like the bullish momentum, and I still tend to believe that either Ripple or Stellar Lumen, or eventually both, will be the number 4 to actually reach out all-time highs. That means a severe price increase could be down the road, because we're actually pricing 0.39 and the all-time highs are pretty much double the price. So yeah, I'm interested by what happened today with Ripple. If it can be pushed through and right up to 0.65, that's probably something I will really have a lot of question on where Stellar Lumen would be at the same time. If Ripple prices 65, that means an open door for breakup, and if Ripple breaks up, I'm really questioning whether or not Stellar will do it as well. By the way, on Stellar Network, I've seen some activity this morning in terms of active accounts, so early signs of something are showing on Stellar Lumen. Still very speculative at that point, but I think out of the altcoins, not necessarily the one that have surged previously are the one that will probably surge a lot. So questioning Stellar and Ripple's battle, this is just early speculative signs I have right now, so don't get me wrong, that is not an entry signal. It's more like if you've already bought this and if you let yourself ride that trend, I still think there's a final upside move, possibly reaching all-time highs. When it goes to a Monero, this guy is still consolidating in here as well, fighting against the higher time frame context, but supported by some upside moves in here. So the question is whether we're going to go lock on some bullish guys again, or we have more than enough and we're going to break this context. Looking at not necessarily price discovery, but breaking a resistance. The resistance is this, so I think Monero has the possibility to break this level. Jesus, if I can manage to make it. Okay, that's a break level. And we've got another breakout level in here. So God knows which one will be traded, but I think that the first one is definitely reachable. The second one still is a question mark. So out of this, I think going out there is a very likely probability for Monero, of course, and I'm going to go for real cautious warning out there. That also means that if you figure out that all the altcoins can only go up, well, that means you're dumb. Nothing is ever for 100% guaranteed. So that means it comes out with a risk. If all of the altcoins were on the verge to dump, then you know the dump will probably be absolutely massive. In terms of Monero, I think it can dump more than half of its price, because actually right now I would see an overlapping support potential, but that's definitely far away from current prices. So that doesn't really come out of risks. It's really more that sure, the potentials could be the potential could be interesting and sounding like, well, I want to be into this game if there is some upside potential. Don't get me wrong, all of the coins can lose a lot if they just fail doing such a thing. And it mostly depends on how solid Bitcoin will be for the next few days. Okay, then you've got the IOTAUSD, lots of gains already. So just like the previous guys, I think the best case scenario is trying to go for a divergence pattern, pretty much like Solana. This guy, whenever it trades right back to the trend channel, lock on the gains. Don't be dumb enough to think IOTA will be all-time high trading anytime soon. I think, yeah, $2 per coin could be a significantly interesting. This is the level I think we can break. So trying to break 1.95 and trying to lock on the gains on top of it. The Atoms blockchain, same thing, lots of gains, okay, consolidating, possibly pushing to divergence. So you can see that the pattern is emerging. We've got multiple scenarios. Each and every one depends on the technical structure we have in front of us. So just be smart enough to figure out that there's no one thing to do for every altcoin. There are different contexts and you need to exploit these differently. Those who will go for divergence patterns are very likely. What I like instead is these types of guy who is still far away. It could be building an overlapping support. If this guy manages its way here, this is a structure that could be interesting. More importantly, just look at that volume. As long as we stay on top of this volume, there is a possibility for a nice upside move on Nano. So this guy will not look for divergence. He's probably going to look for dumbest prices, like parabolic scheming shape. Okay, so look for this one, but I think this one, as long as it trades with this overlapping structure, could go for a wave 5 extended, which means it could try to break this trend line. God knows how how high this could go. All I could tell is that this guy could be stupid. So if you have it on the portfolio, don't necessarily profit take early. Just try to let it ride if you see that there is demand. Just because there is volume, and as long as we trade the overlapping level, there is a probability, reasonable probability, for wave 5 extended to show up. So different structure for this guy. Then let's say this guy, okay, probably all-time high, 1-to-1 ratio. Don't be too greedy. Solana we've seen. Doge, one I like is this guy. Oh man, okay. So quick topic about this. We've got lots of bear signals, sure thing, but we're so lacking of history, so the indicators lack of history to plot the patterns. But still, what I like with this guy is that despite the alerts, okay, despite the fact that this doesn't come out without risks, it's always the case. If you think there are just gains in front of you, that means you're dumb. It's really not the thing. But in here, what I like is this overlapping structure, okay? We've built the 32, which was a level I thought about it. I've definitely seen this resistance, definitely seen the support, which means it's heavily technical. But most importantly, look at that volume. A lot of volume got in, and the volume is really, really well absorbed by the market, which is something I got them like. This is generally the sign of market making, which means professional activity. I can hardly explain all the details about that, but something really interesting happened into this area, and prices reacted positively, and as we got to the overlap, even more volume poured in. I got them like that, which means if this guy surge, this is not the type of thing you want to profit take out there. It's really let that thing ride. It's probably going to trade above this resistant context, meaning going all-time high territory, and God knows how stupid this thing could turn out to be. All I can tell you is that wave 5 extended is probably going to happen for this guy, and most importantly, lots of professional got in, which means they're probably not going to release prices. They're going to let the dumb money getting in, looking for the highest possible price, and when they'll profit take, of course, all of this volume, when the profit takings will be done, God knows how high, could be 160, could be 300, whatever, but when the dumb money will not be sufficiently getting in to take for the profits, to compensate for the profit taking of these guys who put in a lot of volume, this thing will rapidly collapse. So don't get me wrong, if this is a wave 5 extended on the verge to trigger, well, it's going to last longer than the previous one, okay? So it's more like it's going to do something like that, okay? But when the final burst of energy shows up, you know it's going to be a V-shape. Okay, so on this guy, you know that the market top will hardly be catched up. It's pretty much about the fact that let it ride and at some point trigger the profit taking. Okay, so that was a global topic for altcoins, different contexts, different scenarios, different maturities. Some of the guys that are lagging are not necessarily the worst guy. That just means they have to prove strength, and they could just be doing it in the late stages of this bull run. The run terminates and the race terminates when we reach out the final line, which means so far it looks like there could still be a final lap, but that doesn't mean we have to be excited about it. It's more like we know that most of the altcoins that have been performing a lot and that attracts a lot of attention might have a limited potential to the upside. That doesn't mean you have to buy into shit coins. Just stick with the top 30, but try to highlight the different structures. Some guys have a very well constructed structure, they just have been lagging severely. But when they have solid structure, you can bet on these guys, of course. Comes out with a risk, so don't put all your money in the market right now. Don't use too much leverage either. It's pretty much use some stop losses, and if it triggers, well, that's fine. If it does not, then get the fuck out. Okay? And now WTI. We might have signs of reversals as we finally have a third range boundary on the market. So now we need to break a support to make sure that we truly validate and reintegrate the previously squeezed third range boundary, because so far we're just hesitating between breaking this third range boundary, which would be yet another trend follow, or actually reintegrating, which will confirm the market reverse. So hard to say. I can't stress how dumb this oil market has been and the entire energy sector following it. I just got them understand. The S&P 500 is trying to go all-time high, but it's severely pushed back. The double top, I don't like these structures, but still, like I said, taking profits another time. So it really looks a lot like we're going to get a ranging market, possibly trying to accelerate to the 4,000s. but this is pretty much more like this is just a milestone. We don't necessarily have to get there. The market could just go there to send a message, but we could just send the message that everyone wants to go there, everyone's buying coal to go 4,000, and we just do not. We just get there and bang, we fuck everyone else. So just like Bitcoin, I think there's no reason to reverse. There's no reason to be extremely bearish. There's no reason to be more bullish. There are more reasons to stay the fuck out where we are. And in that perspective, I think ranging is the likelier option for the S&P 500, because we could dampen the gains on S&P energy sector. We could start selling these value stock on energy and stuff like that on all of the defensive sectors that have been bought recently. And on the second hand, we can see some opportunities to buy back into Apple's and more tech sector stuff that have been totally slashed recently. So I think some rebounds opportunities on the tech stocks. Don't get me wrong, I don't think all-time highs and no such a thing, just more like Apple rebounding into this area and all of its fellows doing the same thing to build third range boundaries. I don't think more than that, okay? So retracing to build third range boundaries seems like an opportunity on Apples and stuff. So the outside money, the blowing out money we could have on the energy sector could actually just be rolled into the tech sector. And we got the same old stuff of a sectorial rotation. So I don't think the S&P 500 is on the verge to collapse. I just think the S&P could just range, just like I think Bitcoin could do the same thing. The question is just how long can we maintain price above supports, okay, on the top 50% of a range with a positive vision, still without bursting for gains and going all-time highs again. That would be absolutely stupid. Remember, once again, the structure of S&P 500 is this wave is supposed to be the longest, and we're nearly extending just as much. So we must not do this stupid thing of going for 4.1K and so on and destroying volatility once again, because if we do that, I'm selling the fucking crap in May, and I'm basically going to shrink my portfolio to 60% cash and just be ready to short sell the motherfucker if I have a price signal. Okay, so it's really more about that. I've been warning you about the potential for this crashing pattern to actually trigger if we keep on doing the same stupid stuff till early summer, which I still believe we will not. I don't believe we'll collapse. I just think we're going to stay there. Okay, stay there and possibly go to the 3,500 early April. The reason for this is more subjective, but I still trying to explain it as clear as possible. It's just looking at the current structure of our quarterly candles. So this candle will terminate at the end of the month, and I still tend to believe that we're very likely going to get something like a doji. We're definitely not going to close at the highs. I doubt it. If we do it, then that's the sign of continuation for next week, and that will be the sign for a huge market collapse later down, which is not what I think is the likeliest outcome. So kind of a doji, it's probably going to be signaled as well in the quarterly time frame chart, and I think next quarter could be a bearish one with a lower shadow candle. Though I think we're going to get to this 3,500 next quarter and probably rebound out of this as expected to then try to go all-time high again. So the plan is more about trying to assess the timing regarding quarterly candle closes. I doubt we can close at the highs with what's expected to come with what's been coming this quarter, which is more fear about inflation and stuff like that. I don't think closing at the high is a rational thing for this market. So more like a doji, early fake bearish sign, which is probably going to be bought out, and we're going to try doing something like that this year, and we'll see what about next year, if we get a crash or if we go again bullish and stuff. Okay, so we'll see all of this, but this is what I expect for 2021's rest of the year, testing this support and trying to maintain prices higher. That being said, well, this is pretty much going to be enough for today. Bye guys.